Welcome back to The College Investor, the place for investing and personal finance for millennials. Today, we are diving into the topic of credit scores. So in this video, we'll discuss credit score ranges and what it means for your money. I'll also go over two credit scores to consider, including the FICO score and Vantage Score, how the scores are used, and where you can obtain them. So first, what is a credit score? Credit scores are the gatekeepers of credit. They determine how much credit you'll receive and under what terms. Another way to put this is your score determines what loan amount and loan terms you can receive, including things like a home loan, car loan, or personal loan. Credit scores have also become more influential and are now used for job and apartment applications. So we can all agree that credit scores are obviously an area that none of us can ignore. But what impact do credit scores have on our money? Generally, the higher your credit score, the more credit you'll receive. As you'll see, there are no hard and fast rules when it comes to how much credit a lender may extend to you. From the worst scores to the best, there are score ranges that much of the population falls into. So let's go over the FICO score. FICO scores were introduced over 25 years ago and are the most popular credit scoring method, meaning most lenders use FICO scores for determining an applicant's creditworthiness. So the FICO score ranges can be broken down as follows. So if you have a bad FICO score, that score ranges between 350 and 649. A fair FICO score ranges between 650 and 699. A good FICO score ranges between 700 and 749, and an excellent FICO score ranges between 750 and 850. The ranges are directly from myfico.com through an internal analysis of application approvals. These scores are FICO Score 8. That's the name of them, and the most widely used. FICO Score 8 ranges from 300 to 850. There are also industry-specific FICO scores. These are used for bank cards, mortgages, and auto loans. So let's use this in a mortgage example. The following show APRs and monthly payments on a $300,000 30-year fixed mortgage and are based on FICO scores 5, 4, and 2. So you can see that a score of 760 or more has an interest rate of 3.286% with a monthly payment of $1,049. Now, if you had a lower FICO score, such as the 620, you would have a higher interest rate at 4.875% and a higher monthly payment of $1,270. So as you can see, the better your FICO score, the better your interest rate and the more money you'll save. Similar to score ranges are risk rates. So risk rates determine the likelihood that you'll default on a loan. They'll look at the other side of the application process. This is the lender's view. So risk rates are the likelihood that you will default on a loan, or in other words, not pay on your loan. There's a 67% chance that you will default on a loan if your credit score ranges between 300 and 499. Contrastly, if you have an excellent credit score of 800 to 850, there's only a 1% likelihood that you will default on a loan. So as you can see, the higher that your credit score is, the more favorable the lender looks at in terms of the likelihood that you'll default on a loan. In addition to the FICO score is the Vantage Score, which we'll take a look at next. The Vantage Score is similar to the FICO score, except that it is a single score derived from all three credit bureaus, including Experian, TransUnion, and Equifax. This is unlike the FICO score, which uses a score for each bureau. The Vantage Score was created by the three credit bureaus in 2006. So while the FICO score is certainly the most popular, the Vantage Score has been gaining ground. And the Vantage Score follows the same range as the FICO score. So scores can range from 300 to 850, and the ranges for excellent to bad are also similar to the FICO score ranges. Vantage Score claims that it's easier to understand and more consistent than other scoring methods. They have even created a website to help consumers understand the different reason codes associated with their credit. You can view that website at reasoncode.org. So, just like the FICO score, the higher your Vantage Score, the better rates and more credit you'll be able to get, and of course, the more money you'll save. So let's talk about how the scores are used by lenders. So while credit score ranges are a useful guide for estimating what payments, APR, and overall credit will look like, the truth is that lenders come to their own determination. Many factors go into the credit application approval process. Credit scores are just one factor. Often, the larger the loan, the more that will go into deciding if you are approved or not for such things as mortgage applications. But don't overlook the credit scores, they're just as important. Here's how to get your credit scores. So, your FICO score can often be retrieved from your bank or credit card company, although those financial institutions will have the score for only one credit bureau. If you want to see your score from all three credit bureaus, you can purchase a package from myfico.com. Your Vantage score can be obtained directly from Experian or TransUnion. There are also a number of other websites that you can get your Vantage score from by checking your.vantage.com/where-to-go. On the Vantage Score website, you'll be able to scroll through a list of free score providers to get your Vantage score. Alternatively, the government allows consumers to get a free report every 12 months from all three credit bureaus. If you head over to annualcreditreport.com, you'll be able to download a full credit report history, but beware that these reports do not include your FICO score or Vantage score. Bottom line, if you want to apply for credit in the future, staying on top of your credit score should be part of your money management routine. The better your credit score, the more opportunities for credit you'll have.